Hey guys, it's good to see you again. Almost 4 years ago, legendary investor and author Ray Dalio published a book called Principles for Dealing with the Changing World Order. In that book, Dalio argued that the United States was entering a period of decline, not overnight, but slowly, gradually, in ways that many Americans might not even notice at first. He said that no empire stays at the top forever, and that history shows a clear pattern. Rising powers take over, and then older ones lose influence, and then it repeats over and over again. He warned that the United States dollar, which dominated the global economy for decades, would eventually start to lose its special status. At the time when he wrote this book, a lot of people brushed it off. Some said he was being overdramatic. Others claimed that he was underestimating American resilience. And at the time, those ideas sounded almost unthinkable. But now, fast forward to 2025, and a lot of what he was predicting is starting to play out. Just look at the world right now. America is still powerful, no doubt, but we're not as respected or feared as we once were. Our allies are shaky, our economy feels fragile, we're printing more money than ever, interest rates are high, inflation is still a problem, and countries all over the world are looking for alternatives to trade and invest. You know, one of the biggest reasons the United States dollar has remained so powerful for so long, even with all these reckless financial decisions that the United States has made, is because it's been the world's reserve currency. That status gives the dollar a kind of a get-out-of-jail-free card, letting the United States get away with some stuff that would have crushed any other economy. So what does that mean to be a reserve currency? Basically, it means that countries around the world hold your currency. In this case, the dollar, in massive amounts. They use it for global trade, especially things like oil, commodities, banking, and loans. And more importantly, they save it in the form of U.S. Treasury bonds. Because the dollar was seen as safe, treasuries were seen as a sure bet. The U.S. government always paid its debts. That kind of reputation matters a lot when you're trying to store your national wealth. So for decades, other countries, so China, Japan, European nations, oil-rich Gulf states, they all poured their money into U.S. debt. That meant buying treasury bonds. And when countries buy U.S. treasuries, they're basically lending money to the U.S. government, which keeps demand for the dollar really high and helps the U.S. fund its spending. And the wild part is because the rest of the world kept buying these treasuries, the U.S. could basically keep printing money, keep running up massive deficits, and keep spending like crazy. And the dollar just wouldn't crash. It's kind of like if your credit card company kept raising your limit, no matter how badly you managed your money. Let's say you kept spending and spending and they kept raising it. You would just rack up a giant balance, and no one would bat an eye because of your solid reputation. And now today, America's $36 trillion in debt. $36 trillion, that's a massive number. And yet the dollar is still strong because countries still hold dollars. They still buy treasuries. There's still this built-in trust in the U.S. financial system. It's been around for decades, and it's just a habit now. It's a tradition. People assume that the dollar is stable just because it's always been stable. But there's a problem. The trust in the U.S. dollar has been fading for many years now. This graph tells a very clear and concerning story. The U.S. dollar is steadily losing its dominance as the world's reserve currency. In 2016, the dollar made up 65% of global reserves. As of 2024, that share has dropped to nearly 55%. That's a 10-point percentage drop in just under a decade. And while 55% may still seem like a majority, that's actually a massive decline in global monetary terms. When you're talking about trillions of dollars in central bank reserves, even a 1% shift is huge. So a 10% drop is amazing. But then came April 2nd, 2025, and that's when things really took a turn. That day, Trump announced his Liberation Day. He slapped 10% tariffs on all imports from all countries, and especially China. China got hit with as high as 150%. It was meant to look strong, like America's taking back control. But what it really did was send a global message that the U.S. is no longer stable and that the dollar may no longer be stable or safe. And so when those tariffs hit, it wasn't just a slap in the face to China, to Brazil, or to Europe. It was a signal that the U.S. wasn't acting rationally anymore. It looked like a country more interested in posturing than protecting global stability. And you know what happens when a currency depends on trust? The second that trust breaks, the floor drops. Suddenly, everyone was asking, if the US can just change the rules overnight, how can we keep trusting its currency, its policy, its bonds? The reaction from the global market was brutal. Within hours, the dollar lost value, US stocks plunged, and even more concerning, the bond market went nuts. What really spooked investors isn't just the tariffs or the foreign backlash, it's actually what's happening in the US bond market. So let me break it down for you. For years, the United States could borrow money by selling government bonds. Government bonds are basically like IOUs because the whole world trusted that we'd always pay them back. People bought treasuries because they were considered safe. They were reliable, and they were backed by the full power of the U.S. economy. But now, with foreign countries now dumping bonds, that trust is weakening. And when demand for bonds drop, yields go up, meaning the United States has to pay more interest just to borrow the same amount of money. And so what does that mean? It means that basically everything's going to get more expensive for the U.S. government. Debt payments skyrocket, inflation pressures build, and everything starts getting chaotic. America's already paying hundreds of billions of dollars annually just on interest. So if these payments go up, what does that mean? It means a deeper deficit. It means maybe a cut to infrastructure and social programs. And maybe we'll just have to borrow more money, so continue printing. Either way, it's just unsustainable. And then came China. They responded the fastest and the strongest. While other countries bent the knee, other countries got scared, China just went full head on. Responded to America. And one of the biggest headlines was that China told its airlines to stop accepting new Boeing jets. That move sent shockwaves through the U.S. aviation industry because Boeing relies heavily on Chinese customers. We're talking about thousands of aircrafts projected for delivery in the coming years. And China just said no. So China just cut them off like that. And it's a huge deal, not just financially, but also symbolically. It's a clear sign that China is ready to start pulling back from American-made products, from American industries, and especially like American aerospace, where the U.S. has traditionally dominated. But China didn't just stop there. They also instructed domestic airlines to stop buying aircraft parts and related equipment from American suppliers, which might not make as many headlines, but it's still just as hard. That kind of move ripples through the entire supply chain, and it doesn't just hurt Boeing, it hurts dozens of other U.S. companies, it hurts U.S. manufacturing, maintenance services, and more, and all of that. And then there's investment. China quietly imposed restrictions that blocked new Chinese investments into the United States, particularly sensitive sectors like tech, manufacturing, and finance. But the thing is that Chinese capital, Chinese investments has been a major force in American real estate and American tech startups and other fast-growing industries. They relied on Chinese investments. And now that these Chinese investments are no longer present, it's going to get worse for many companies in the United States. So basically, China is reshaping its relationship with the U.S. It's using economic leverage to protect its interests, and it's in the process of chipping away at American influence. But even more importantly, China started offloading U.S. treasuries, the long-term government bonds that fund America's massive debt. In other words, China didn't just hit back with trade. They went straight for the backbone of America's dominance, which is the US dollar. And it makes sense from their perspective. When a country's economy or its political system starts looking volatile, investors look elsewhere. And let's face it, between the ballooning US debt, the chaos in Washington, and now these aggressive trade policies, America isn't looking like the stable, dependable country it once was. And what's more is US allies are noticing this. Countries like Japan, South Korea, even Europe, are reassessing their own ties with China. Not because they suddenly trust China more than the United States, but because they can't afford to be caught in the crossfires. If doing business with the United States means facing trade penalties, investment restrictions, or unpredictable policy shifts all the time, then working more closely with China, a more stable country, looks like a safer bet. China says they're always open to investment, always open to trade, while the U.S. is constantly up and down, volatile. Yet, despite all of these developments, the leadership in Washington remains certain that they will prevail, that the United States will enter a golden age.
To anyone on Wall Street this morning, I would say trust in President Trump. This is a president who is doubling down on his proven economic formula from his first term. We saw wages increase. We saw inflation come down. We had a Trump energy boom. We had the largest tax cuts in history. And that's exactly what the president intends to do following his historic announcement yesterday for reciprocal tariffs. It's the golden age rule for the golden age of America. And the United States of America is no longer going to be cheated by foreign nations around the world. And as the president declared yesterday, this is indeed a national emergency. We have a $1.2 trillion trade deficit and counting. We've had 90,000 factories close.
But let's be honest, one of Trump's defining traits has always been his overconfidence. He doesn't hide it. He always talks tough. He always says what he thinks and doesn't really seem to care if he offends people. And that kind of attitude worked for him in business, and it's clearly what attracts people to him. I get it too, yeah. But there's a difference between being bold or honest and being arrogant and delusional. And right now, that arrogance and delusion is starting to backfire big time. We all saw it. We saw it in that viral clip where he said that other countries are kissing his, you know what, in response to international criticism of his trade policy. It was classic Trump. Dismissive, blunt, full of arrogance. Just take a listen.
I'm telling you, these countries are calling us up, kissing my ass. They are dying to make a deal. Please, sir, make a deal. I'll do anything, sir.
But that clip you just saw, it says way more than just one man's attitude. It reflects an entire worldview inside the current administration. Not only the current administration, but the entire U.S. government. A belief that the United States can act however it wants, whenever it wants, and the rest of the world will just fall in line and obey the U.S. One of the biggest examples of this American arrogance in recent years is how the United States thought it could take down Russia with sanctions. From the very beginning of the Ukraine war, Washington acted like they had this all figured out. The plan was simple: just slap Russia with the toughest sanctions in history, cut them off from the global financial system, and watch the economy collapse. I remember they said the ruble would crash, that Russia's banking system would fall apart, that companies would flee, but none of that happened. Instead, Russia adapted very quickly. They built new financial systems to get around SWIFT, and they leaned into their energy exports, which, by the way, kept selling because Europe still needed the oil and gas from Russia. The ruble took a hit early on, of course, but it bounced back, and in fact, some reports showed that Russia's economy grew in the following years. During this time, Europe was struggling. Of course, Russia struggled a bit, but it managed to bounce back. However, Europe has not managed to bounce back, and Europe is still in stagnation. Germany's economy is still in recession, for example. And we're seeing that same story play out again, but this time with China. If you listen to the people in Washington, they're making the same overconfident claims that they made with Russia. They say things like, China's economy won't survive this. These tariffs will bring China to its knees. It's the same old attitude that America can apply pressure, make threats, and the rest of the world will just follow suit, and China will fold.
China needs to make a deal with us. We don't have to make a deal with them. There's no difference between China and any other country except they are much larger.
Maria, I think it's unfortunate that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world, and I can tell you that this escalation is a loser for them. That they have some very smart, the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what?
But the reality is that, in fact, it's starting to look like this trade war is going to hurt the United States way more than it's going to hurt China. China's economy is holding up surprisingly well. In early 2025, their growth actually beat expectations thanks to strong domestic spending and big industrial output. They've also spent the last decade diversifying. They're much less dependent on the U.S. market like they used to be, and now they're doing more and more trade with Asia, with Africa, and the BRICS nations. And now with the U.S. cutting ties, they're simply just going to move faster in that direction. Meanwhile, back here in the United States, we're the ones that are already feeling the pain. Prices are expected to go up across the board for basic goods, for electronics, for construction materials. It's the average American who's going to pay for this, not China. This isn't to say that the United States is finished. Far from it. The dollar is still powerful and America still remains a huge part of the global economy. But the idea that the United States can unilaterally call the shots and that the whole world will simply fall in line is just an outdated idea, outdated mentality. The days when the U.S. bullied everyone and got away with it are just simply over. And we are witnessing the rise of a new multipolar world order where other countries have a voice and real influence. Thank you guys so much for watching this video. I appreciate it if you watched it to the end. If you like this video, make sure to leave a like. If you agree with me or disagree with me, leave a comment below. And if you want to watch more videos like this, make sure to click on this video here or this video here. And I will see you in the next one.